Such is the custom that investors are purchasing securities through a broker. Sometimes investors grumble to each other about how their brokers are ripping them off. They talk about how these middlemen pocket a portion of their profit and capital each month with their exorbitant monthly fees and enormous commissions fees, and how if investors were given control, they would abolish the entire institution and leave investors to interact with the stock exchange on their own behalf. Just imagine thousands of investors lined up at the exchange to withdraw and deposit money, to resolve disputes, to find out how and when dividends are going to be paid out this year. Tens of thousands of investors are hammering, calling in an effort to place orders to buy and sell instruments. Hundreds of thousands of potential market players tear sales managers into pieces by asking questions, the answer to which they could easily find in the booklets they're holding in their hands. The stock exchange would be a hopeless mess without brokers. 100 years ago, investors crammed on the floors of a few stock exchanges and actually had to do all of this themselves. Brokers don't just provide financial and documentary help. They provide other customer services like analytical reviews and record keeping on purchased securities. They also act as a fiscal agent, among many other things. Choosing a broker is comparable to choosing an automobile. Everything has to be considered, from safety to costs to comfort and how you plan to make use of the broker's services. Many times we've seen novice investors buy a tractor to drive around town with, or a compact car to make an expedition through the desert. We've then seen them put on winter tires in the summer and drive around bare in the winter. Don't repeat their mistakes. Learn the right way to choose a broker.